Hey people, so we got some trades going on today, some earnings trades, and as you can see, these are all, uh, except for Disney, pretty high in the IV percentile ranking that we have here on the Thinkorswim app. Um, I did the Disney trade anyway, just because it has really good volume and it's announcing earnings. I just had some capital I wanted to deploy. I was going to do a Spotify trade you see here on the bottom, but I realized that Spotify, if you look at it, does not have kind of what I look for in an earnings trade, which is a history of good sort of volatility crush at earnings. So if you go back, 3 months, well, here it kind of did crush down and didn't move that much. So this kind of thing right here, that's good, right where the implied volatility goes way down. But it hasn't been that consistent, right? If you go back another 3 months, like in August, I mean, there was some drop, but not really as much. Yeah. Anyway. So I might still make that trade, but it just wasn't as good as the other ones. So anyway, these are all queued up, and I've got them here in Robinhood. As you can see, there has been, yeah, I've actually still got that spot trade queued and waiting. It just hasn't filled because I'm pretty aggressive on my pricing because it moves a lot during the day, oftentimes intraday. As you can see, a lot of these have already kind of moved from where I place them, so I'm actually down on several of them. Have been up on some others. Yeah, so we've got basically placed this. This was my sort of Disney trade. You can see it's the short strikes are like pretty far out. This has got what, a delta of, oh wait, is that even the short strike? Oh no, that's the long strike. Okay, so long, here's my short, 15 delta, right? That's kind of what we're looking for, about 15 delta on either side. Where's the other one? Yeah, and 14 delta, right? Well, it's going to be about the same on most of these, except for I did the more of an iron butterfly on Snap, just because volatility was really high. I wanted to take advantage of that, so I had my short strikes at 7, both my short strikes at 7, and then like just $2 out, because Snap doesn't really have much pricing or liquidity once you get further out. Like the options just get really cheap really quick. It's kind of funny. If you're selling a put, it's, go out just a couple strikes and it's like penny options. So I didn't really bother going too far out on Snap. The other ones I was, trying to be as wide as I can given, my sort of limited collateral. So I've got like this Zendesk situation, where it's $5 wide wings on it. Yeah, so basically short 75, short 55 strikes. It's currently at 68, so it's fairly wide. Again, around that 15 delta mark. And then on Lily, I was also a little bit more aggressive just because of the way the pricing was. So iron butterfly on that at 122, centered at 122, and the stock's now at 120 because I think it's just been, well, really 121. So I sort of put it centered it a little bit higher just because it's been pretty on a tear lately, and I just think it's probably gonna pull back a little bit on earnings. I don't really know, but we'll see. Either way, I'm out wide enough that I should be okay here. I've got like eight strikes wide, so collected enough credit on that, $3 that I should be able to stay within my break-evens. So that is that for today's trades, and if you have questions, leave a comment, and I will come out tomorrow and let you know how all of these went. Been pretty up in the last couple earnings trades this week. Had a couple of them there, and then this was like one Amazon trade that, again, really pretty far out, but you know, again, just really overstates implied volatility, and you can make quite a bit of money here. Okie doke, thanks for watching. See you tomorrow. I'll let you know how these trades go.